It's early February 2021. I'm here with my business partner, Mr. Christian Matthews. How you doing, buddy?
Good, man. How are you?
I'm awesome. I'm awesome. So let's jump right into things because, whoo, what a month.
Right.
Wow, what is fire? So what I see happening, low-rise sector of the market, we're talking detached semis, towns, no big changes there in that it's still heated, bidding wars, bully offers if you're talking the downtown core, little east, little west. And I don't think that's going to change. I think it's probably going to get worse. I think the condo market, we're starting to see a really big shift back to possibly in the near future, a seller's market. Your thoughts really quickly on that?
I'm with you. I think that we're seeing crazy numbers in the freehold market. And whenever that happens, like we saw in 2017, where the price kind of gets to a certain point, it pushes more people back into the condo market, which is why we might be seeing people jumping back into that, as well as people that were maybe on the sidelines last year and now just want to jump back in.
There could be some frustration. So let's dive into the stats. That's what everyone is here for. So let me just share my screen and market update on the screen. We're good?
Good.
Awesome. So a quick recap of what we're talking about and where we're talking. We're going to talk low rise. We're going to talk high rise. We'll briefly touch on the rental market, and then we'll talk about the market insights, what we see. So for the purpose of this video, we're only talking about the downtown core. We do have East End, West End, and North York statistics if anybody's interested. So let's start with low rise. And by low rise, we're talking detached semis and townhouses. And this is the average price growth. Now, again, take this with a grain of salt because we're comparing January 2020 to January 2021. The next slide, we're going to talk about a rolling 12-month average. But if you were to just take a snapshot and say, well, how much was a detached house last January versus this January? There was an 8% decrease, which is why it's so important to really understand the stats. So there was an 8% decrease in the average detached home price. Semis were up 23%, townhouses down 16%. So let's look at the 12-month rolling average meant to smooth out the seasonal fluctuations and take into consideration the previous 12 months of growth or decline for that matter. And what you'll see here is a different story. The average detached is up almost 6%. The average semi is up 8.5%, and the average townhouse up 0.9%. Don't read too deeply into townhouses because townhouses include, you could have a 3-level townhouse, which is part of a condominium. You could have a freehold townhouse. You could have a small 600 square foot stacked townhouse. So I think townhouses, although there is a desire for more space that comes with a townhouse, I think it should be taken with a grain of salt as well, because we could be talking about a 500 or 600 square foot stacked townhouse. So since the pandemic began, this wonderful graphic representation of what's been going on, you can see normally the blue line is detached homes. There are seasonal fluctuations. I mean, there's nothing unusual about that. It happens every single year. Same with semis and townhouses, which is the gray line here. But overall, prices have been trending upwards since the pandemic began. The number of sales, this is where it starts to get very interesting. So the number of sales, detached semis and towns up 35 to 76%. But keep in mind, Christian, last January and February, the market was very, very tight. Would you not agree?
Yeah, last year we were saying how much of a quick start we got off to the market, and this year we're almost doubling, or 76% and 62% in towns. We're even surpassing last year's mark, where we were saying at this time was red hot. So
yeah. Agreed. So when we start looking though at these statistics, and my apologies, I'm just going to fix my screen here so that it includes everything. What we've done here is we've broken down detached semis and townhouses into different price bands or ranges, if you will. So if you see here, we're comparing January of 2021 to January 2020. So again, take it with a grain of salt, but what you can see is that what's pulling down the average price in the detached segment is that there was one sale in this $600 to $1 million price range, detached homes in the downtown core. And last year, that one home sold for $975,000. This year for $800,000, which is a 17% decrease, which is going to pull the average price down. The big thing I'm taking out of this is $1.5 to $2.5 million price range for detached homes. Huge number of sale increase in that price range. And what you're seeing here, and again, take it with a grain of salt. And I keep saying that because 1.5 to 2.5 is a huge range of prices. So if you had the majority of sales closer to 1.5 million this year, as opposed to closer to 2.5 million last year, that could skew the average price. But what I'm taking out of this is there are just more people looking in this price category. No big surprises there. 2.5 up and up. You're still seeing price gains, but you're seeing the number of homes in that category change. The biggest thing here is just 1.5 to 2.5. Huge number of people starting to look in that price or buying homes in that price range. Semis, again, pull into this here, 1 to 2.5 million. Big changes in the number of houses, semis that are trading in that price range, and changes in prices as well. And then townhouses, again, because you're getting stacked towns. There's all different types of townhouses, freeholds. You could have those that are part of a condominium. You're just seeing different price brackets changing, different number of sales, and then price changes as well. I think what you're seeing here is, this 1.5 to 2.5 again speaks to even semis and detached. You're talking about people looking for more space, and the prices of these sorts of townhouses has gone up accordingly. So. I guess what I'm trying to say is take everything with a grain of salt, do a little bit of your own homework, and dig into really understand the stats. So let's talk a bit about new listings and active listings. Just fixing my screen here for us. What you'll see here, more properties coming to market in some categories and not in others. So we're not seeing any more detached homes come to market than we did this time last year, but semis and townhouses, definitely more product coming to market. But, and this is where the big but comes in, what's left at the end of every month? Because Christian, you're in bully offers and bidding wars, as am I all the time these days. And what we're seeing is what I've scribbled on the bottom, a 35% increase in detached sales, 76 semi increase, 62 townhouse increase. And then you couple that with a 3% decrease in inventory. So it's no big surprise that prices are jumping, because in each one of these different categories of homes, you're seeing that sales are outstripping supply or active inventory by a fairly large margin, which is why we're continuing to see prices go up as that inventory erodes away.
Yeah.
Now, sorry, you were going to say something.
Yeah, I was going to say, just go to show that there's no inventory. And just to go back to your earlier point, this is mostly central Toronto. So like you said, take it with a grain of salt. The stats are very similar on the west side and on the east side. I just want to mention that. And that's why it's very important to contact us about specific neighborhoods, because we can hone down on what's happening there. But you'll see the numbers. That's why we're kind of seeing this huge surge of offers, because as you mentioned, there's just no inventory and just a lot of buyers out in the market.
And to your point, if anybody wants it, we have the East End, the West End statistics as well. So just let us know. We're happy to send them over to you. So this here is months of inventory. And what you'll see is that, again, only focusing on the highlighted parts here, which are detached semis and townhouses, there's anywhere from 1.5 to 2 months of inventory. This 12-month rolling average, we're nowhere close to a balanced market. We haven't been. I don't think we're going to get there anytime soon. When I look at the single month of activity in terms of months of supply, months of inventory, you can see 1.3 to 2.2 months of inventory. So we're not, again, in a balanced market. No big surprises there. Sorry about that. Let me just scroll down and let's talk about high rise. Let's talk about condos, which has been the darling and the demon of the Toronto real estate market, because it was so great pre-pandemic, and then during the pandemic, nobody wanted them. And I guess the question is, where are we now? So focusing in on the downtown core, what we have here is that if I look again, snapshot January versus January, we had a 16% decrease in the average price of a condo in the downtown core. We will dive into this in just a minute. When I look at the 12-month rolling average, we actually saw about a 1% increase in the average condo price. So, interesting. So let's continue along here. The pandemic began. We had a dip, as we did for all housing types. Condos came back. They never really crept back up the same way that the low-rise segment did. And then for a few months, because of that surge in inventory that we had for the first 6 months of the pandemic, prices started to come down. This is where it starts to get interesting. So we had a 110% increase in the number of sales in January 2021 versus January 2020. Now remember, January of 2020, pre-pandemic, the market was very tight. So looking back over previous years, we still definitely saw an increase in the number of sales, which was notable. Like I think that, it was up across the board. I know we said we wouldn't be including some of these graphs to kind of add to this, but I wanted to bring this up. And Christian, we decided to bring this in just because normally what you would see seasonally is you would see the number of sales start to decrease in December, stay a little low in January, and then start to pick back up again under normal circumstances in the spring, dipped back down into the summer, peak again in the fall. But we're seeing the exact opposite. Like, look at this here. We're seeing condo sales just taking off, which is the exact opposite of what I think everybody expected. Would you not agree?
This has caught us by surprise. I mean, I don't think we ever thought that we'd get, back to a certain level in the condo market so quickly. And I think it attributes to a lot of people kind of sitting on the sidelines over the past year, wanting to get back in. But yeah, that chart there is for a reason, to show just the massive increase in last month.
Wow.
Crazy.
So let's dive into where this is happening. And I'm just going to resize my screen here. Same chart that we talked about for the low rise segment. What you're seeing is this right here, a 273% increase last month versus previous January in condo sales under 500,000. You saw a 44% increase in $500,000 to $700,000 condos, and then even 750 to $1 million, a 70% increase. Now, those sales increases do not correlate directly to increases in price growth. I mean, there was a surge of supply. So as that supply starts to erode away, I think you're going to start seeing these prices start to rebound. And again, with the number of sales being skewed, like there were a lot fewer sales in the $1.5 to $2.5+ million price range, it's going to affect the number of sales in general. And the same thing for prices, right? Like it's being pulled down by certain segments of the market, primarily the luxury end of the market. But with so few sales, they can easily be skewed in either direction. I think what you're really looking at here is that over last January, which was a hot month, there really weren't huge fluctuations in the average price, which is contrary to what I think a lot of people would expect in the midst of a pandemic. So including that there, and let me just share my screen again and try this. So here we go. New listings, a 69% increase. Sorry, Christian, you were going to say something?
Yeah, I think back that last slide for a second. What I find amazing in that is that, it became a buyer's market so quickly last fall. And for us to even be back to where we were last January, I find is astonishing. I find that is incredible how fast that's going.
Well, it's heating up really, really quickly. So let's just dive into this here. Sorry about this, everybody. I'm just trying to get my screen sized properly. New listings, yeah, we did. We saw a 69% increase in new listings. No big surprises there. Normal fluctuations. What we're seeing is more or less new listings in line with seasonal characteristics, seasonal, trends, is the better word. Active listings, though, this is where, again, we're talking 108% increase over this time last year. But looking back over the 3, the 5, the 10-year average, we're really only up 20 to 60%, which again is notable. But when I skim down here and we look at number of active listings, we really hit a peak back in October. Like, look at the differential here. This dotted line was last year. Inventory levels were generally very, very low, but look how much we've come down. So as the inventory comes back down to, let's call it normal levels, we're going to eventually, if that continues, see prices start to rebound. And that's what we're seeing now. It's not that they're rebounding in a huge way and taking off like the low rise market, but they're definitely starting to surge. So pandemic hit. This is a 12-month rolling average showing that we peaked here at about 3 months of inventory, and it looks like we're turning a corner and coming back down. And for last month, we had 1.6 months of supply at the end of the month. So if everything were to continue in 1.6 months, if nobody else listed a condo for sale, there would be nothing left for sale. Like that is certainly worth noting. And I think we should be, Christian, paying attention to it. So without diving into too much more details, everyone's been talking about immigration and how that's going to, possibly impact the market rebounding, in particular the condo market, because People have not wanted higher density living in the midst of the pandemic, but with bubble-like conditions happening in the suburbs and with housing prices in the downtown core being fairly unaffordable, if you've got $1 million budget, you're not getting much of a house, which means that you're seeing what other options do you have, and that's where the condo market comes back into play. And this is what we've seen in the past. The express entry invitations, I saw this on, I think it was Ben Rabidou's, I hope I pronounced his name correctly, on his Twitter feed. And I know that some other realtors, some great realtors that produce monthly information, John Pasalis, Scott Ingram, and a number of other realtors talk about this too, where we've commented on immigration. This is express entry invitations are for skilled newcomers to the country, expediting the process of getting them here. There's about a 6-month lag, from what I understand, between the invitation being issued and then those newcomers coming and trying to become permanent residents here in Canada. And if this continues, now this may be an anomaly, just a single month, but if these sorts of statistics are representative of what we might see, I think in a lot of ways the condo market may come back a lot sooner than we anticipate. I mean, 6 months out, we're talking into the summertime. If immigration returns to pre-pandemic levels, I know the government had a target of 1.3 million people over the next few years. That could mean that the condo market, both rentals and sales, towards the latter half of this year gets very, very busy, very busy. I don't know how else to say that. So I don't think there's too much else for us to comment on. Really, the rental market, very quickly, no big changes there. I mean, I'm seeing that properties continue to kind of linger on the market. Well-priced rentals are still renting them out. We're renting properties out only if they're well-priced. Are you seeing anything different?
No, I've seen that the rental prices are basically the same. I mean, they might dip a little bit more, but I don't see any increase in those at all. I will say that what we're noticing and telling our clients too is that we're seeing a shift in the condo market much faster than we thought it would be. So, we don't like to say buy now, but
No.
Now could be a good time to get into the market because we're kind of seeing a turnaround. I mean, after August of last year, things kind of really came to a halt, and I think active listings were the high, 2,700, 2,800. Now we've dropped, 1,200, and now a bunch more buyers have got into the market. And what we're seeing now is actually properties holding back in the condo market and having multiple offers. So I think that's an indication that could slowly come back and prices could start to increase slowly over the next couple months.
Yeah, I think it's going to be very interesting to watch how the next few months unravel, because again, everybody's comparing it to the previous year. So Jan and Feb last year were very, very hot markets. I think if the market picks up a big head of steam, you could see some very unusual statistics come out come May, June, and July of this year. So, for everyone out there, like we said, we're not here to pressure anyone into doing anything. We don't want to feel like we're selling anyone. We're simply advising people and guiding them through the process. But I think the opportunity really has been the last few months, and I think that window of opportunity may be closing. So, get qualified, be prepared, and when you see something that you love, be prepared to go for it if you like it. And I look forward to next month and seeing what kind of stats we see then.